This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 16th, 2016. Euro dollar. So the euro has come back under pressure over the past several sessions since stalling out by a fresh 2016 high at 116.17 and just ahead of critical medium-term resistance at 117.09 further up. At this point though, while the market holds above 112.17, the pressure does remain on the top side, but we have seen some weakness which is suggesting that the market could take out that 112.17 low over the coming sessions. 112.17 again is going back to that low that we saw on the 25th of April. A break below that level would take the pressure off the top side and suggest that we could see more significant declines over the coming days and weeks. Sterling dollar. So cable has recently stalled out again above 146.70, some key resistance, with the market feeling like it wants to be pressured back on the downside. At this point, it's going to take a break back above 46.70 and really a break back above 47.70, that high from the 3rd of May, to officially take the pressure off the downside and suggest the market could be putting in a more significant base. Until then, scope exists for deeper setbacks and a potential retest of that recent 7-year low from February at 138.36. Dollar yen. So dollar yen has been consolidating its recent correction, though the market overall remains confined to a downtrend and is looking for that next lower top ahead of a resumption of declines back down towards and below that recent 2016 and multi-month low at 105.55. Euro Swiss. Overall, despite recent setbacks, Euro Swiss remains very well supported on dips and has been recovering in recent trade, with the market looking to take out recent resistance at 111.10 and trade back up towards the multi-month highs at 112. At this point, look for setbacks to be well supported into this previous support zone around 109.55, with ultimately only a breakback below 108 to compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie has pulled back in recent trade from those 2016 highs all the way down and through the 200-day moving average. At this point, we could see a bit of a bounce in this market, though any rally should be very well capped in the 74 to 76 area ahead of additional weakness back down towards initial psychological barriers at 70 and potentially towards a retest of that 2016 base at 68.27 further down. Dollar CAD. So dollar CAD is finally showing signs of basing out after putting in a 2016 and multi-month low at 24.61. Look for a break back above 130.16, that recent high, to confirm and strengthen this outlook and open the door for a fresh upside towards next key resistance at 132.19 further up. Kiwi dollar. So Kiwi continues to be very well offered into rallies, and the market has recently stalled out again ahead of 69 in favor of the next downside extension. Look for a break back below 67.16, the previous weekly low, to strengthen this outlook and accelerate towards next key support at 65.46 further down. SPX 500. So the S&P 500 is showing signs of stalling out above 2100 again, with the market now forming a head and shoulders top with the right shoulder carving out. Look for a break below 2021, that critical support in the form of that low from the 24th of March, to strengthen this outlook and accelerate declines back towards initially a measured move objective in the 1930 area, though ultimately if the market does break down below 2021, we could actually see a retest of the 2016 low and below. The 2016 low comes in at 1808. Gold. So gold has been comfortable consolidating in recent trade, though ultimately the pressure remains on the top side, and the market is expected to take out the recent 2015 high at 1307, the high that was seen back in January of 2015 at 1307, and open the door for an acceleration towards 1400 further up. Any setback should be very well supported down towards 1200, with only a break back below 1190 to compromise the constructive outlook for gold.